NVIDIA just booked $81.6 billion of revenue in a single quarter, and it will not tell you where most of that money came from. In its official filings, the buyers are hidden behind code names: Customer A, Customer B, Customer C. Together, a small handful of these anonymous companies now account for the majority of everything NVIDIA earns. Figure out who they are and why they keep paying, and you understand the entire AI economy. Because NVIDIA stopped being a chip company a while ago. Today it operates more like a toll booth, planted on the busiest road in modern business. In the next few minutes, we are going to take this machine apart. Where the money comes from, why the margins look almost illegal, and the specific places where the whole thing could crack. First, why you should care. In October 2025, NVIDIA became the first company in history to close above a $5 trillion market value. That makes it one of the largest holdings inside the index funds that sit in pensions and retirement accounts around the world. If you own a broad market fund, you own NVIDIA, whether you chose to or not. Its results have become a proxy for the entire AI trade, which means that when NVIDIA sneezes, your portfolio catches a cold. So this is not corporate trivia. Understanding how this one company earns its money is now part of understanding your own. And the story starts somewhere unexpected. It starts with video games. For most of its life, NVIDIA sold graphics cards to gamers. That was the business. Then researchers discovered that the same chips that render explosions are remarkably good at training neural networks. Both jobs are really just enormous amounts of simple math done in parallel. Here is what that discovery did to the income statement. In fiscal year 2026, NVIDIA's gaming division brought in $16 billion. A great year. It grew 41%, and it barely matters anymore. The data center division brought in $193.7 billion. That is roughly 90 cents of every revenue dollar, up 68% in a single year, inside a total of $215.9 billion. So here is the payoff of Chapter 1. NVIDIA is not a gaming company with an AI side hustle. It is an AI infrastructure company that still sells graphics cards out of habit. Chapter 2. What is NVIDIA actually selling for all that money? Not chips. Not really. The modern product is a complete system. A Blackwell rack ships as one integrated machine, dozens of GPUs, NVIDIA's own processors, networking gear, cabling, cooling, and a mountain of software all sold together. A single rack costs millions of dollars. And because nobody else sells the whole package, NVIDIA can price it almost however it likes. The proof is the gross margin, which has been running around 75% in recent quarters. For every dollar of hardware sold, roughly 75 cents survives the cost of building it. Across fiscal 2026, that added up to $120 billion of reported net income on $215.9 billion of revenue, a net margin above 50%. At industrial scale, traditional hardware companies would kill for a fraction of that. Which raises the obvious question. AMD builds excellent accelerators. Google and Amazon design their own. So why does the money keep flowing to NVIDIA? The answer is a piece of software from 2007 called CUDA. CUDA is the programming layer developers use to talk to NVIDIA hardware, and the company has spent nearly 2 decades making it the default language of AI. More than 4.5 million developers now use it, and nearly every major AI framework was built to run on it first. Switching to a rival chip means rewriting code, retraining teams, and retesting everything, so most companies simply never do. That lock-in is why analysts estimate NVIDIA still controls roughly 80% or more of the AI accelerator market. The chips are the product. CUDA is the moat. But here is the part nobody talks about. Open NVIDIA's quarterly filings and you find a strange disclosure. In the quarter ending October 2025, just 4 direct customers accounted for 61% of all revenue. One buyer alone was 22%. NVIDIA names none of them. And it gets stranger. Direct customers are often middlemen, system builders who assemble the racks for the true buyers. Follow the money one layer deeper, and the filings admit that indirect customers, including one unnamed AI research company buying compute through cloud providers, can also represent 10% or more of revenue. Most observers read that description as OpenAI, so the most valuable company on Earth depends, quarter after quarter, on the purchasing decisions of roughly half a dozen organizations. That is the payoff of this chapter, and it is the risk hiding inside every record earnings report. So who are the mystery buyers? Almost certainly the hyperscalers. Microsoft, Amazon, Google, and Meta, plus the big AI labs they bankroll. Look at their budgets, and NVIDIA's revenue stops being mysterious. Those four companies alone have signaled combined capital spending in the range of $700 billion for 2026, most of it aimed at AI data centers. They are buying compute for their clouds, for their own models, and for customers like OpenAI who rent it back out. NVIDIA sits at the cash register for nearly all of it. That is why the company guided its next quarter to around $91 billion in revenue. The machine works because the richest companies in history are locked in an arms race, and NVIDIA sells the arms to every side. Now for the uncomfortable twist, NVIDIA's biggest customers are also its most dangerous competitors. Google designs its own TPU chips and trains its Gemini models on them. Amazon builds Trainium, Microsoft has Maya, Meta runs its own accelerator program. Every one of those projects exists for a single reason, which is to send fewer billions to NVIDIA. Then add AMD, whose Instinct chips keep closing the performance gap. None of these threats needs to kill NVIDIA to hurt it. If custom silicon merely shaves a slice off hyperscaler orders or forces real price competition, that beautiful 75% gross margin starts to compress. And when four buyers supply 61% of your revenue, you do not need to lose many arguments, you just need to lose one. Then there is China. For years, it was a multi-billion-dollar market for NVIDIA's data center chips. Today, American export controls have squeezed it to almost nothing. NVIDIA's own guidance now assumes zero data center compute revenue from China. Read that again. One of the two largest AI markets on the planet, written down to zero in the official forecast. There are two ways to see this. The bearish read is obvious. A giant market lost, and a reminder that one policy decision in Washington or Beijing can vaporize billions overnight. The bullish read is stranger. NVIDIA is posting record quarters while effectively locked out of China, so the current machine runs entirely on Western demand. Whatever happens next in China is either pure upside or more proof of how political this business has become. So what could actually break the machine? Three cracks are worth watching. Crack 1 is concentration. Half a dozen buyers fund the empire, and their spending is a choice, reviewed every quarter by boards under pressure to show real returns on AI. Crack 2 is competition. Custom chips and AMD eating into orders, and more importantly, into pricing power. Watch the gross margin line, not the revenue line, because margins fall before revenue does. Crack 3 is the cycle itself. If AI products fail to earn enough profit for NVIDIA's customers' capital spending gets cut, and NVIDIA feels it instantly because infrastructure suppliers always feel the downturn first. None of this is a prediction. It is a map of the pressure points, so you know exactly what to watch. Let's go back to that opening number, $81.6 billion in one quarter, and reframe it. That is not really a measure of chip sales. It is a measure of belief. The belief, held by perhaps 6 organizations, that owning more computing power than their rivals is worth almost any price. NVIDIA built the toll booth on the road to AI, paved the road with CUDA so nobody could easily exit, and now collects 75 cents of margin on every dollar that passes through. As long as the giants keep racing, the machine keeps printing. The moment one of them blinks, Customer A stops being anonymous and starts being a headline. That is the machine economy, and you are living in it. Subscribe now, because on Wednesday we open the file on Builder.ai, the AI startup accused of faking its artificial intelligence with 700 human engineers.